Hello everybody, today we will be talking about our two companies, Tableau and Alteryx. Starting with the business analysis. Business intelligence, or BI, is a relatively young industry formed as data processing capabilities have improved over the last 30 years. Beginning in the late 80s and early 90s, companies began to realize the benefits of a focused in-house data analysis effort. We can roughly break down the history of BI into three waves. The first wave, BI 1.0, took place in the 1990s, where it was used to produce data, organize it visually, and provide insights. However, analysis was complex and very time-consuming, so it took a dedicated team of IT professionals. The second wave, BI 2.0, began in the early 2000s. As BI became more important, various companies began developing self-service tools that were simple to use. This allowed more business users and not only the IT team to perform ad hoc analysis, reducing time to insights. While BI 2.0 is still rather prominent, there has started to be development into a new wave of BI where enterprises are recognizing the enhanced capabilities of BI and want sophisticated tools to gather, visualize, and analyze data all in one platform. More and more enterprise-level businesses are now seeking smart data discovery, self-service integration preparation, and flexible deployment to enhance their analysis. Tableau is a visual data analytics software created in 2003, providing a suite of products that allow business and individuals to perform easy visual exploration and presentation without the need for coding or complex IT skill set. Tableau is widely considered to be the gold standard in data analytics visualization. They were one of the early entrants to the segment and have very high market penetration. Tableau's products are focused on easy self-service tools for any business user to use and is also highly interactive, which makes it easy for the average user to explore data and find insights, and they offer it through many different mediums such as on-premise, online, etc. However, Tableau is facing some key large challenges as the segment has become extremely competitive with many very well-funded competitors entering the space. Also somewhat concerning is that Tableau's core offering, visual-based data exploration, may no longer be differentiated enough to sustain an edge, as users are now seeking smart data analytics and machine learning, which is an area that Tableau is not leading in. Tableau was founded in 2003 by a team of Stanford graduates and took their first round of funding in early 2004. Over the next nearly 10 years, they developed and iterated on their product while expanding their market share in the nascent business intelligence field, taking funding as they needed. Finally, in mid-2013, Tableau IPO'd and raised $254 million and have acquired 3 companies since to increase their mobile offering, as well as to solidify and defend their edge in data analytics. It is also important to note that very recently they shifted their pricing model, which has affected their revenue, as we will see later on. Alteryx is a business intelligence workflow software that helps users quickly prepare, blend, and analyze data from almost any source. Alteryx provides users with a unified analytic experience focusing on simple-to-use self-service tools easy enough for the business user and powerful enough for the data scientists. Alteryx can be best thought of as a complementary product to Tableau, making the preparation and analysis of data easy to be exported into Tableau for visualization. Their key product is Designer, which simplifies the preparation and blending of data for visualization. One of the key challenges Alteryx faces is their lack of front-end visualization, one of the core features of data analytics and offered by many of their competitors. As such, it cannot currently be used as a sole platform, but rather an intermediary into another software to create visualization. Alteryx was founded in 1997 originally as SRC and released a product called Alteryx in 2006. They officially changed their name in 2010 and since then have continued developing their current product line and took regular venture funding, raising a combined $163 million in 4 years. In late March 2017, Alteryx IPO'd and raised $126 million. Since going public, Alteryx has acquired 3 other companies, each with the goal of expanding their platform and furthering their global reach. So if Tableau and Alteryx are complementary products, how are they also competitors? As mentioned previously, Tableau currently focuses on data visualization, while Alteryx focuses on data workflow. However, the BI market is becoming very crowded, and the future of BI is on one platform that provides all of these capabilities. Tableau has already begun competing with Alteryx by introducing Tableau Prep, which helps discover and prepare data for visualization. As large enterprises are becoming increasingly aware that business analytics is key, they're willing to pay large sums for a single platform to provide quick and detailed analytics. With the development of the new wave of BI, there's an increasing focus on smart data discovery and artificial intelligence with the ability to analyze complex data quickly with more sophisticated tools while maintaining strong data governance. All of these are features that both Tableau and Alteryx are working towards. While they are complementary for now, they're already taking steps towards competing with each other over a single platform model. Tableau's core mission is to help people see and understand data, which drives everything they do. To continue expanding, one of Tableau's key focus is to continue to expand their customer base by landing and expanding. They are also working towards broadening their platform to allow for unique, tailored solutions for every business, with a special focus on enterprise-level accounts. Alteryx's core mission is to empower analysts and analytical-minded leaders with self-service data. Per their mission, they want to continue to innovate their dual mandate of sophistication and ease of use, but grow in a meaningful and scalable way. As they expand, they are looking to address a broader set of use cases, which will tie into their next goal of capturing a greater percentage of their total addressable market, both domestically and internationally, while generating positive cash flow. As mentioned, BI is a crowded market. There are a range of competitors from independent startups such as Tableau and Click to large enterprises such as Microsoft and IBM. Large companies like these excelled in BI 1.0 by catering to sophisticated users, but were very slow to adopt BI 2.0 and its focus on business users. However, they are actually ahead of the curve on adapting to the new wave of BI with smart data and AI analytics capabilities. As shown, many of the competitors have a broad range of analytic capabilities. What differentiates these companies specifically and make them key competitors are their simple integration into enterprise-grade applications or their innovation into smart data, predictive analytics, and data governance. Perhaps the biggest competitor here is Microsoft, who has the ability to spend lots of money on R&D and provide an integrated enterprise-level platform, all at an affordable price. Moving on to the financial analysis. On Tableau's most recent quarterly earnings call, they shared that Q1 was a fantastic start to 2018. While they disclosed a mandatory change to the revenue recognition model, they noted 3,900 new customers and strong subscription revenue growth. One of the key things they wanted to highlight for the future was their development of Tableau Prep, which provides users with the tools they need to reduce time spent in prepping data rather than actually analyzing it, directly competing with Alteryx. On Alteryx's most recent quarterly earnings call, they celebrated their first anniversary of going public. They added 281 net new customers with strong demand internationally, and are opening offices all over Europe and Asia to accommodate this demand. They also introduced two new products, Alteryx Connect and Alteryx Promote. They share year-over-year revenue growth of Q1 of 52%, with projections for 2018 being 39 to 41% higher than the year-over-year comparison from last year. Next, let's look at the Wall Street's opinion of each of these companies. In aggregate, Wall Street appears to be neutral to slightly optimistic on Tableau based on the ratings of 34 analysts. Analysts have a 12-month forward price target of $95.70 for Tableau, which they are already trading near. Projecting forward both to the end of this year and the end of 2022, analysts project very robust revenue and net income growth for the company, similar to what Tableau has projected for themselves. However, analysts worry about both their earnings per share stability as well as their ability to continue growing revenue at the paces set out by their projection. Wall Street is slightly more optimistic on Alteryx, but based on the ratings of just 9 analysts, they have a 12-month forward price target of $37.90, which Alteryx is trading a fair bit below. Just like Tableau, analysts project robust growth for their revenue and net income over the next 4 years, with similar targets to what Alteryx has set out for themselves. The key concern for their growth is the ability to capture a greater percentage of their total addressable market.
A risk analysis of these two companies reveals that each company has unique risk, but they also share some risks in common that we have to consider and understand before an investment decision can be made. These firms have unstable, unproven long-term customer retention records. Although we feel Alteryx is in a stronger position with its land and expand strategy, and we feel this will help them integrate as an integral partner with their customers. But at the end of the day, neither has demonstrated long-term retention in the current wave of business intelligence. Many other competitors, such as IBM and Salesforce, have a wider variety of services other than the singular focus of business intelligence that Tableau and Alteryx offer. These firms can also potentially subsidize or operate their BI markets at a loss, while Alteryx and Tableau really don't share this capability long term. This is compounded by the fact that R&D costs industry-wide are increasing, and other firms have more capital and more revenue sources. Like take, for example, Microsoft or SAP, which have robust offerings that they could lean on. Nipping at their heels, there are open source alternatives such as Google Data Studio or Power BI, which can be used free or freemium model, and they're becoming increasingly sophisticated, and it's going to make it harder for both of these companies to penetrate into new markets that are just starting to adopt BI systems into their operations. More specifically, if we look at Alteryx has a smaller number of customers, and it's arguable that this risk could actually be a strength since Alteryx has better customer retention rate and deeper relationships with their customers than Tableau. However, this also makes them more susceptible and more sensitive to losing the customers that they do have. Alteryx's price is also much higher than that of the competition. Do a like-to-like example, a standard no-frills out-of-the-box Alteryx subscription is about $2,000 a year, while a comparable Power BI subscription would be about $120 a year. It's a big difference, especially for small companies that you want to grow with. On the other hand, Tableau has recently transitioned from a perpetual license where you buy it once and use it forever to a software as a service model that requires a subscription fee. While early revenue reports in 2018 look good, it remains to be seen if customers will stay with Tableau long-term with this new model. Even before the switch to this SaaS model, Tableau's revenue growth has been subject to fits of boom or bust. Both Tableau and Alteryx executives are compensated by a combination of base salary and stock options and performance bonus awards. Alteryx was recently listed, so a lot of their executive compensation schema data is not publicly available yet, but they have indicated that performance is based upon revenue targets. Tableau uses a third party to determine bonuses based upon equity growth. While neither compensation scheme is inappropriate for where they are in the market, we feel Alteryx's offers advantages by directly addressing revenue growth, which is a necessary goal for Alteryx to maintain a competitive position in the current market.
Next, let's look at the horizontal and vertical analysis of our two companies. Please note, all numbers for both Tableau and Alteryx are denominated in units of 1,000s. First, let's look at Tableau. The balance sheet summarizes the financial condition of Tableau from 2015 to 17. As you can see in the current assets, there is a decrease in cash, which is probably due to the acquisition of Clara in August 2017. However, if you look at the statement of cash flow in the bottom left, you can see that Tableau has been increasing their cash flow from operating activities year over year, indicating positive cash flow from their core business activities. Overall, their cash flow is actually decreasing as they're spending a significant amount of money on investing activities, which is expected in growth stage company. We can also see there was a meaningful shift in their short-term to long-term investments over the 2 years, going from 0% to making up a quarter of their total assets. Finally, their current liabilities increase a lot more than their current assets, which leads to a decrease in some of their financial ratios in the later presentation. Despite these, overall, both Tableau's assets and liabilities are going up. The income statement listed here summarizes the revenue and profitability of Tableau from the period 2015 to 17, which can help us identify risks, opportunities, and forecast future performance. As we can see on the income statements, Tableau increased their revenue 26% from 15 to 16, but remained fairly level from 16 to 17. Despite increasing their total revenue, Tableau is still operating at a net loss, due in a large part to their significant operating expenses, which are continuing to grow. High costs are to be expected in a growing company provided there is a commensurate revenue growth. Despite the large increase in operating expense, their R&D budget only grew 10%, which potentially explains their inability to keep up with the next wave of BI. Reviewing Alteryx's balance sheet, we can see their assets growing and accelerating, growing from 13% 2015 to 16 to nearly 62% 2016 to 17. The single largest contributor to Alteryx assets growth is their cash and cash equivalents. From their statement of cash flow, Alteryx raised their cash flow from negative 6,000 to a positive nearly 19,000 within 1 year. This turnaround in cash flow is boom to the company and in line with their goals per their earnings call. Perhaps even more impressive than simply having positive cash flow is that they have accomplished this while still maintaining a significant cash flow from investing activities, which would normally be a drag on positive cash flow, although expected from the growth company. One area of concern on the balance sheet is their liabilities more than doubling, but we feel this is also to be expected given the growth on every other section of the balance sheet. This is also partially explained by the deferred revenue growth, a common liability for SaaS companies. This is also a positive because it means that they have significantly grown their subscriptions who pays upfront. From the income statement, while Alteryx is still running a net loss, total revenue growth is still fairly remarkably in 2016 and another 53% in 2017, showing strong improvements. Alteryx will continue to run at net loss as they continue to increase the operating expenses to fund both R&D and marketing to grow their business. We also note an increase in their administrative expenses, which is a result of their increase in hiring, another key driver for future growth. Much of their hiring is occurring overseas as they try to grow their international business. Next, we analyzed the ratio of each of these companies. We started by examining each company's solvency with their current ratio. The higher the ratio, the more solvent they are, which indicates better liquidity. While the current ratio of Tableau is presently higher than Alteryx, we can see that Alteryx's ratio has been improving. Unlike Tableau, we observe a similar trend in the quick ratio, as one would expect. Next, we look at the profitability of each company, judging based on their return on equity. Both Tableau and Alteryx have had a decrease in return on equity since 2015. In an ideal world, these numbers would increase due to higher profitability. However, given the competitive nature of the segment and the level of growth they are striving for, it is natural that their return on equity would suffer while their increase in expenses to solidify their position.
So we've gone over the lay of the land. We've gone over the risk assessment. We've gone over the financial statements. So what is our conclusion? Do we invest or do we lend to either of these companies? Let's start with Tableau. Ultimately, we do not recommend Tableau for investors or creditors. We recognize that Tableau has a good top-line revenue, especially in the most recent 2018 quarter. As far as reputation in the BI market, Tableau has a strong standing, and some even call it the golden standard. It's easy for customers to pick up and start seeing value from using Tableau solutions, but from an investment perspective, there are long-term concerns about Tableau's cash flow, which continues to be negative despite gains in revenue. 2018 was a strong year, but 2016 was a bad year for the company, and it remains to be seen if the shift to SaaS can retain the customers that Tableau needs. Most importantly, Tableau is behind the competition in the development of smart analytics that will play a key role in the next wave of BI solutions. They lack the sophisticated market and the differentiation between Tableau's current offerings and are no longer distinct from the field of competitors. When these facts are coupled with the past revenue growth insufficiencies and history of net losses, this casts doubts on the long-term survivability of this firm. Even if Tableau remains solvent in the immediate 5 years or so, we do not expect the ROI to exceed that of safer investments. For creditors, we have reservations about Tableau's long-term solvency. They do not have liquidable assets to hold as collateral. Moving on to Alteryx. We are much more bullish on their prospects as an investment choice. They are a relatively new IPO, but revenue is growing. They have a strong stable of customers and partners, such as Google and Salesforce. They have a positive growth rate over the past years of greater than 50%, and they are on track for their current revenue targets, and the differentiation in the marketplace gives them some insulation from a crowding market. Because of Alteryx's strong position in the development of next-generation business intelligence systems, they are a potential target for acquisition by a larger BI developer such as IBM, SAP, or Oracle, who are former giants in the industry who are looking to reposition themselves in the BI market. And we feel that they will look at Alteryx as an opportunity to enhance their current suite of business offerings. Either of these options, continued growth or acquisition, are attractive to investors who are willing to tolerate a little price volatility. As a creditor, same as with Tableau, we do not recommend Alteryx for lending. Tech companies in general are unattractive to creditors due to the instability in the pursuit of rapid growth, as well as the lack of tangible collateral. There's nothing particularly exceptional about Alteryx's position that would make them more attractive as a creditor risk. So in conclusion, those are our recommendations. Tableau, we do not recommend for either investing or lending, but Alteryx, we do think it could provide a great opportunity for investors. Thank you.